This episode of Profiles in Risk is sponsored by IA Path, unlocking your adjusting superpowers. Go to iapath.com.
This is Profiles in Risk. Hosted by Nick Lamparelli. Every week, we interview those who risk life, limb, fortunes, career, and reputation, and those who work behind the scenes who look to protect and enlighten us about risk. You can find the show notes and other insurance-related content at insnerds.com. That's insnerds.com. Now, on to the show.
Hello, everyone, and welcome to Profiles in Risk. I'm your host, Nick Lamparelli. On this overcast early morning at Boston Logan International Airport, I'm sitting in a car with my buddy, David Wright, reinsurance broker at Beach and Associates, managing director, New York office. And how was your flight?
The flight was fine. It was as the pilot said on the way out, he said the taxi just took as long as the flight will. 30-minute flight, 30-minute taxi. So the whole thing was like an hour.
Yeah.
But we were barely in the air. It's amazing.
I didn't even ask you, where'd you fly out of? Newark?
Newark, yeah. Everything's out of Newark, New Jersey.
Okay. So that's tough too. Waking up early, going to Newark.
It was an early morning, although last night I slept like garbage, so I was able to wake up. I just woke up on time, as it happens. It happens, you get an early flight, you got it in your mind.
It's funny. I probably went to sleep at like 10:30, which is the time I normally go to sleep, but I had trouble falling asleep because I knew I had to wake up early.
Yeah.
To drive in. So enough about flights. Let's talk about what we didn't talk about the last time we interviewed, which is I had scheduled your interview to talk about being a reinsurance broker. And we ended up spending most of the conversation talking about actuarial exams and you crying.
Yeah.
Which you became kind of famous for, because I had a lot of people reach out to me like,
Is that right?
Yeah, I listened to that podcast, and yeah, I know exactly how he felt, and so anyways, let's talk about the reinsurance brokerage area and what you do and how you do it. So first, for the listener's sake that may not be aware, what does a reinsurance broker do? What's like a elevator pitch style, what is the function that you bring to the insurance ecosystem?
Sure. Well, I'll answer by telling a quick story. So I was driving across the border from Canada. I'm from Canada. I don't know if we've mentioned that before. Probably.
Is there a wall?
No wall.
Oh, okay.
Maybe not yet. There's probably some walls, but I haven't seen any. The rivers, a lot of rivers and waterways, which are also barriers. And the guy at the border, this is on the American border, me coming back, said, "What do you do?" I handed him my work visa, and he said, "What do you do?" I said, "I'm a reinsurance broker." And he said, "What is that?" It means I sell insurance to insurance companies. And as he's handing me back my passport, my kids' stuff, he said, "Well, I hope you're screwing them as bad as they're screwing me." Being the insurance companies. So reinsurance is selling insurance to insurance companies. Insurance companies need insurance too, and that is because insurance is volatile stuff. And the easiest example to describe it is when you have a hurricane that hits Florida, there's a lot of insurance policies that get affected by that. An insurance company might have a large concentration of its portfolio in that area, which happens pretty frequently in that part of the world. And they can't actually handle 25% of their policies having a total loss at once. They just do not have the capital for that. The regulators don't require them to hold enough capital to pay all those claims at once, because they can buy reinsurance, which triggers in the event of some event happening, and they can claim off the reinsurers and use that money to pay for the event. So reinsurance is protection against volatility of an insurance portfolio, as opposed to an individual insurance risk.
Yeah. So what always surprised me was you think of insurance companies as being smart consumers, right? It's basically the style of product that they sell, just maybe ratchet up the complexity a bit, or maybe not. Maybe it's even a little simpler because it's aggregated. I don't know. We'll have you answer that. So that's what always surprised me when as I was making my way through my career, I just didn't understand, why would an insurance company need a broker to buy reinsurance? They already know what insurance is. They probably know what they need and how they need to do it, I think. So why does a broker need to step in to help them fulfill a function that they are very familiar with, how it needs to be handled, bought, sold, everything?
Yeah, that's great. That's a great way of framing that question, actually, because it brings out two ideas that are both really important. So one, there's the usual kind of service, I guess, that a broker can supply, which is, and the way I like to put it is, a broker is who protects you from getting screwed as a buyer of something, and I see that as actually broken up into two sub-elements. So one is, they're going to go to the market and they're going to manage far more market relationships than any individual can manage on their own, and that means they can find the best price. That means they can go to 15 or 20 different reinsurers, they can solicit quotes from all of them, compare them all together, and say, here's the best deal in the marketplace. Now, that second part is as important as finding the best deal is only half of it, because the other half is communicating that you have the best deal. And so you might get the best deal on your own, but you don't know it's the best deal unless you go to the market. And so this communication part of it, I think, is an underappreciated element of just sales generally. Is if you're canvassing a market, you're both getting the best outcome, but you're also recognizing that the best outcome has been achieved, and I think it's pretty powerful. But so the broker does that, and they are able to represent the client and then manage this whole marketplace set of marketplace relationships. But the other side of it is actually interesting too, which is that insurance companies don't actually know that much about reinsurance. It is, of course, a similar risk. Individually, they're similar risks, and they aggregate up to a portfolio. But running an insurance company is a lot less about thinking about what kind of capital you need to service the risk than you might think. And the way that it gets framed in reinsurance, in the reinsurance world, and by me and my colleagues and market relationships, is actually they don't spend a lot of time thinking about reinsurance because they have a lot of other things that they have to do. You think about systems. You have your own sales channel. You have your own product you're trying to design and sell. Launching an insurance product, it's interesting. So oftentimes I'll have a client that says, we have a product that we want to launch, and we designed it, we got the policy form, we think the clients want to sell it, we got a price that we think is going to work, and the reinsurers say, whoa, what was the price? And that's all they care about, the reinsurers. They don't care about anything else. All they care about is the profitability and the volatility associated with the price. And then the insurance people are saying, well, the price is like maybe the easiest part for an insurance company to design, rather than the rest of it. And think about getting the distribution in place, educating your sales force, getting the system programmed.
Regulations.
I mean,
the stuff you have to file.
Like the amount of work they put into the rest of that is, probably like 95% of the total amount of work you put in. And there's this little bit for price at the end, which is like, well, we're going to price it to a 60% loss ratio. If we realize the price is wrong, we're going to adapt the price. I mean, that's what we do for everything else. And so they don't actually think as much about pricing. I mean, of course they do, and maybe I'm exaggerating a bit, but it's way, way, way more important to reinsurers than it is to insurers, or at least because reinsurance gets to abstract away all the messy details of actually running an insurance portfolio, and so they don't think about it. They don't understand it. They don't understand the context in which their value is embedded in the rest of this process, and the rest of that process is just as important. There are a lot of reinsurance executives that retire from the reinsurance industry, they make tons of money here and there, and they go into insurance, and they get their heads blown off because they think they understand the most important part, and they don't. They're totally mistaken. So insurance and reinsurance, although they're kind of versions of the same thing, reinsurance is hyper-focused on actually a pretty small part of the insurance industry. And I think insurance companies themselves can underappreciate really what the reinsurer's perspective is on the problem.
Yeah, so you brought up a couple good points. One is, it reminds me of a podcast. I don't have my notebook with me, so I hope I remember to put this on the show notes. Anyone listening to this knows how much I focus on the sales aspect of insurance. And so I listen to a lot of podcasts that are sales oriented outside of insurance to get their perspective on things. And there's a fairly new type of sales methodology called the challenger sale, which is, you don't just show up and ask a bunch of questions and try to solve problems. The salesperson actually brings a lot of value to the table. Besides just asking questions, they should challenge their prospects to think about things outside of their comfort zone. And one particular one, the gentleman the researcher that came up with the challenger sale idea or theory or methodology, said he approached the I think it was information officer, so like a technology person at a company, and said, if I have one more salesperson come up and ask me what's keeping me up at night, I'm gonna scream.
Right.
You as the salesperson meet hundreds of people more than I do a year. You should be telling me what should be keeping me up at night. And I almost think now that I've been exposed to all different areas of insurance, that's one thing I think a reinsurance broker does bring to the table as the value add. You see a lot of best practices. You're dealing with a lot of carriers and a lot of reinsurers. And what you can bring to the table is not just, hey, let us broker your reinsurance purchase. It's, hey, have you thought about, going into this line of business? Or have you thought about changing your claims methodology to, streamline expenses and make the process better for the customer? So you bring a lot of value add. You bring a lot to the table that can actually help a carrier fulfill their function better.
Yeah, that's an interesting point. And part of me wants to push back a bit against it. But let me just sort of see if I can get there. It's definitely the case that we understand, or at least we transact a lot in many different risks of an insurance company's portfolio. But yeah, I think that you have to recognize that we're not walking into a new sale environment, right? So we're not walking into, or we do actually occasionally do this, but the vast majority of the time, they already have a reinsurance program. They're already doing something with the reinsurance marketplace. They're already managing their risk in a certain way. And so the incremental change in what we can bring to the table isn't as obvious for anybody as you might think, because we could walk up to somebody who's not buying any reinsurance and say, well, there's a couple of like easy ones. Do you buy a cat program? Do you have any excess limits? Do you have any really volatile portions of your portfolio? Do you have any portfolios you're trying to turn around? Or do you have the risks of the business? Where are they? And let's focus on those. But once you get past the obvious stuff, and they already are tackling that, we can bring some ideas from the marketplace, what we've seen, to a company. But at that point, actually, every organization's problems are very much their own. You ever heard this Tolstoy quote, which is every happy family is the same and every unhappy family is unhappy in its own way, right? Yeah. And so it's almost like, I don't know if the right word is, it's not a personal thing because they're organizations, but it's called idiosyncratic to them. And the way to sell to an organization like that is to try and understand what the problem is that they're working on or thinking about, and get there kind of to have a step ahead of them. And so that's where you ask about their organization, you ask about their strategy, you ask about their company, you study the organization, and then you're going to have I'm going to have a whole cupboard full of solutions in my head of things that I know can work in whatever situation. I just don't know which situation is most important, because we were talking about this just before we started. Once you have an opportunity to build trust with somebody when you're on the same page about the problem is, right? But if you start pitching them something that they don't care about, they're going to have this kind of like cognitive dissonance. There's a little jarring moment in the relationship, which could just blow the whole thing apart. This subtle little game that you play there. And so if you're pitching the wrong thing a little bit too hard and thinking, I just got to convince this guy that this is the real risk of his business is facing, he's like, they have an intuition, call it a CEO, that I don't really care about this. And then you're suddenly not communicating in a healthy manner.
What if they should care though? What if what if there's something pressing that you're seeing that this is going to be very important to your business, and I guess it's walking a tightrope a little bit. You can't push too hard, but
right.
You have to.
The standard of evidence for that is huge. Like they have to be like genuinely even then. If you're going to the CEO and saying you don't understand this part of your business, you gotta be real careful with that one, because if it's an obvious miss for them, you gotta be it's really delicate in how you communicate it. If it's not, and you're pushing it anyway, they're saying, I don't care about this. Even if it's something they probably should care about, it's not your business, it's theirs.
Well, I've worked at a global carrier, so I can tell you like a personal experience. I remember we were testing a new catastrophe model,
right?
Doing a full year's evaluation. Ran our book, and something popped out to me that was like incredibly unusual. Losses in Florida were much higher than anyone had thought, and so there was a lot of skepticism, like on the cat modeling side, like that can't possibly be. We're a Northeast centric book.
And we'll get right back to this podcast right after a short message from our sponsor. I'm back with Chris Stanley, founder of IAPath. Chris, when someone is interested in becoming an independent adjuster or independent appraiser, what can IAPath offer them?
Nick, at IAPath, we recognize that getting people to take a chance on a new vendor or independent adjuster is challenging. So one thing that we do to help IAs is train them, certify them, and mentor them. We want to give them the skills to actually do the job and in turn give the hiring companies confidence to try out our graduates. We call these interactive online courses and mentorships boot camps. We also offer self-paced training videos and IA networking and support through our monthly membership that we call the League of IAs.
Learn to write auto, heavy truck, and other claim types with IAPath's online trainings. Unlock your adjusting superpowers. Go to iapath.com.
I've worked at a global carrier, so I can tell you like a personal experience. I remember we were testing a new catastrophe model,
Right.
doing a full year's evaluation. Ran our book, and something popped out to me that was like incredibly unusual. Losses in Florida were much higher than anyone had thought, and
Right.
so there was a lot of skepticism, like on the cat modeling side, like, that can't possibly be. We're a Northeast centric book, and started to dig into it a little bit, and it's like I don't see anything wrong with the modeling. As a matter of fact, I believe this model more than the one that we're using, simply because of how it was designed.
Right.
It was designed to take into consideration the tail events, but not like the mega tails, the black swans, and there wasn't a lot of emphasis on that. And it was basically like, unless we can provide more information, there's nothing we can do with this. I've found out since that they've proceeded to remedy that problem. So it was actually a problem that was brought up. So when being a broker, a regular broker, not a reinsurance broker, and being on the carrier side, I find that like executives that work at carriers are so focused on their day-to-day business, the regulatory filing, dealing with the brokers, getting the communication right. How are we going to price this thing? How can we deliver tools to the underwriter so they can do their job faster? That some of these big things do actually fall through the cracks.
So I like that story because it brings out actually what I think is an important and subtle point here. Once we get the data, and we're being given permission and being asked to analyze the data, at that point, this kind of sales process I'm talking about really doesn't apply anymore, because then you're already in. So then you're
so we're cutting this into you
pitching a new idea.
You sitting in a boardroom, almost meeting them for the first time to, okay, you have some kind of engagement with
producing
them.
as opposed to analyzing.
Now it's actually in the engagement process. You want to kind of show off a little bit. Like, hey, look at all these things that we found.
Because actually, the first situation, the one where I'm producing business in front of them, that's sales. The other part's not really sales anymore. And so, but that can be confusing, because obviously, by discovering there's an issue in the portfolio and then saying you should buy this extra cat program or whatever it is, that is a sales process, right? They're buying something, you're selling it, but it's not the same intellectual activity, because you're not actually trying to convince them to trust you. You're not building, and maybe we're stumbling on a definition of sales here. Sales is the generation of trust so that they will begin a transaction. Once you're doing the analysis, it's down the road. Like, if they give us the data, I mean, we're an idiot if we can't produce a piece of business out of it now. The bar is way, way, way lower. In fact, there's a lot of, I've talked to people about this and hear of it, and I've never experienced it, but at the larger reinsurance broking houses, they don't have a sales culture anymore. They call them farmers themselves. This is not me. This is somebody else that I know who was telling me about this. They call them farmers, right? So all you're doing is you got this big client, and you're just trying to, subtly move or increment their buying one way or another, try and figure out the problem in their portfolio and just get deals done, right? There's no pitch. There's no high pressure situation where you might not get it. It's just tending to the reef and making sure the thing doesn't die on you. And that's a much lower pressure situation. It's much more bureaucratic and analytical and less tense. And so I would argue it's not sales.
Yeah. I think it's part of the sales process. I think you must continuously build trust, but I agree with you. The bar is set lower. So once you're in, you should be able to produce something to keep the trust train rolling forward.
It doesn't always work that way. I mean, depending how you frame the evaluation. So we can walk into a client and we'll say, we think you should do this. And they're saying, great. Or a better way of putting it is, here's a bunch of things we have done before. And then hopefully that sparks a conversation with them about what their real problem is. Because the best producing meetings are where I'll walk in and I'll say, here's 4 or 5 things here's case studies. I'd like to present them as case studies. Things we've done which are good and we've helped a client and we've done something cool. And they said, well, that's great. And they sort of sweep it aside. Here's what I really care about, right? And that's like, bang. Oh, yeah. Now we got it.
Yeah.
So now they're going to say, here's my real problem. And you say, well, here's a potential solution for that problem. Why don't you give us your information and we'll evaluate that. We'll mock it up. We'll get you a few shadow quotes, desk quotes, and then you can decide what you want to do, right? At that point, there's still a failure probability, but they will need to commit organizational resources to giving you that information, and then there's some certain momentum and direction of actually doing something with you.
Yeah.
And so there's this game that plays out in this kind of like client negotiation of they don't want to waste your time, quote unquote, right? And so what they mean by that is they don't want to waste their time, and they don't want to actually pull in resources off other projects to try and supply the information and answer your stupid questions because you don't understand the portfolio yet, unless they're pretty sure something's going to happen. And that's because they have a certain pre-commitment once they get to that data transfer level.
Yeah, and from my experience on the carrier side, one of the carriers I worked for had 3 reinsurance brokers.
Right.
And not only that, they had a seeded team.
Yep.
So they had a team dedicated towards supplying the reinsurance brokers with information on a year-round basis. So there was like an incredible commitment. So I can imagine that if another reinsurance broker showed up, the data's there and all of that, but it's like, what else can we possibly get that the 3 brokers we have now aren't doing? And so on the retail side, being someone that I started out that way. There's the word broker that's thrown out there, but that can mean a lot of different things.
Yeah, sure.
On the retail side, a broker could be the person that has the strong relationships with the underwriters in the market. So they know how the market's operating. They're the ones that, are meeting with the underwriters, having lunch with them, figuring out, what kind of capacity they can offer, what kind of deals they want to see. And then there's the broker that is actually going out to client visits. They're meeting with the client. They're trying to get new business. There's a lot more I think there's a lot more pressure to do that on the retail side. Is there a similar concept on the reinsurance brokerage side?
You mean different people?
Yeah. So you could be called a broker, but you could be market-facing or you could be client-facing.
I see. Yes, to a slightly lesser degree, probably. But yes, you will have... It depends on the size of the account. So for smaller accounts, really, the smallest accounts, a lot of this doesn't apply quite as much because you only have sort of like one person at the company that you're dealing with, usually the CEO, and you don't have that much reinsurance business. You have a couple different deals, and you have a small team behind you. But smaller regional companies, you'll have the least amount of differentiation between the brokers, between kind of that's called the service personnel at your broker. Larger organizations, you're going to cover a lot of ground, right? And so you have this called the product design team and the sales and production team and the client relationship management group. And then behind kind of like, let's call it a couple people that are running that, you have people that are going to be managing the information flow. And so you have junior people who are client-facing junior people. And those would tend to be shared with the reinsurance marketplace as well, because they're doing the data transfer. So they're saying, hey, we have these requests from the reinsurers, we have to build this, we have to run this in the CAT model, and they go to the client, and they go to a different part of the client hierarchy in their organization. They're more junior there, and they say, give us the data, they get the data, and they send that to the reinsurer. So there's the data transfer layer, and there's the negotiation layer, which is above it, where you'll have client negotiation and then market negotiation, which can be differentiated. Because you'll have people, London is the clearest example. So when you go to London, let's say you're a U.S. domestic reinsurance broker, and you got to go to London. It's a distinct marketplace with distinct relationships, and you literally need to be a Lloyd's broker in order to transact in Lloyd's.
Yep.
And so it has to be somebody else by regulation. And I think to a slightly lesser degree, that's the case for other jurisdictions, like in Bermuda, let's say, or Europe, if you have to go there. If you're in the domestic market, it's a little bit less the case. Sometimes you'll have somebody in your office will have a really good relationship with these 2 or 3 companies and say, "Well, can you just help me on this one?" and you be the point of contact for them. That can happen. So I would say the short answer to your question is when there's jurisdictional issues, yes. Otherwise, it's kind of a case-by-case basis, and the lines are a bit more blurred.
Yeah. So we have a mutual friend that I was counseling was considering, thought that reinsurance brokerage might be the right route, and I've probably fielded this question quite a bit when it comes to the reinsurance side. Is what does it take to become a reinsurance broker?
Interesting.
Is it all glamorous? I mean, it just seems like a job that's a little less stressful than the pressure to produce on the retail side, but you get access. You need to have an analytical bent and all of this stuff. So someone that's listening that might be interested in trying to go into something like that, how would they go about doing that? How does one become a reinsurance broker?
It's a great question. It's harder these days because it's not an industry that's growing in the aggregate. It's probably shrinking in headcount. I guess that depends on what your other options are, right? So the insurance industry, generally speaking, is consolidating, and there are fewer people that are fewer jobs around, and so maybe reinsurance broking is still, let's put it this way, reinsurance is call it a higher status end of the insurance business.
Yep.
And that's because it's hard, right? And that's because it's complicated. You have to understand a lot of things, to your point about analytics. In order to how to get in, the short answer for how to get into the reinsurance business is to know somebody who's in there and is looking for new people.
You don't generally go to a website and fill out an application. I mean, they probably do have to post the jobs, but that's not how you get in.
No, I mean, no way. For us, we've periodically when we've hired junior people, have done a search from universities and stuff, but we don't. It's pretty rare that we do that, and we tend to wind up with a flow of people for in the industry. That's the case for a lot of people, where you ask how do you get into the insurance business. I mean, for a certain number of people, it's my dad was in it or something like that, right? A lot of people, it's hereditary, like many industries, and so you tend to have a connection with people. It's all the CEOs out there, or many of them, call it publicly traded CEOs, their kids all go to hedge funds, right? Or they go into investments, because that's sort of these really fancy jobs that pay very well, and the kids are probably hardworking and they're really smart, and it's no accident that's the way that tends to go, right? Because they have access to that world.
Yeah.
And unless you get access to that world through some kind of relationship, it's kind of hard to break in. It really is. I mean, you can pepper, if you have extraordinary motivation and extraordinary, call it paper credentials, that being you're obviously, you graduate at the top of your class or something like that, in some technical field, and have a good personality, and are really driven and want to sell, you can track me down and I'll talk to you. But part of the test is, can you figure it out, I think. And I don't mean that in any kind of arbitrary sort of, we're trying to keep people out sort of way. It's just, there's not an obvious resource need for us. And so in a marketplace like we're in now, this changes periodically too, right? I mean, you'll have in the reinsurance business, you'll have hard markets where we're scrambling for resources and we're dying to get good people in, right? It's just not that place in the market cycle right now.
Yeah, I think probably the boon was probably the introduction and the take-up of cat models, because all of a sudden there was, here's this new tool and it's specialized and we need special talent,
Sure.
to understand it. And so when I was at AIR, my first 4 years, that's what I did. I was responsible for the reinsurance brokers, and every time I would go to visit a reinsurance broker, there'd be new people sitting at the table. They were constantly hiring. And now that I've been outside of that for a while, what's interesting is that a lot of the folks that I had developed relationships with are now reinsurance brokers.
Yeah, right.
They transition, so they develop these amazing aggregate analytical skills, and we're able to transfer that to to the sales side, the market side and,
Yep.
and work on the communication. And so I think there's a lot there for what you said, which is, you know, part of the test of getting in is the test of getting in. Like
Yeah.
you need to figure out how to navigate that minefield to get in, but once you're in, it's probably a pretty good field. I mean,
It is. I mean, it's a. I mean, I love my job, and I've worked at my company my entire career.
Yep.
And I was a summer student at Beach and never left. So it suited me very well. I think that the analytics is an important part. I mean, even for non-technical roles, we've designed Excel tests and much more technical about. You have to be able to read a spreadsheet and understand the data and think about it in order to get into our door, no matter what you're doing, really. And so people who have, you know, people who don't want to crunch numbers and don't want to be analytically focused, they don't have a place in my organization, or at least not in the part of the organization which I control. Now, I am probably a little bit farther out in the tail there in the spectrum of people who care about analytics, because I'm an actuary, but I run a sales company or a sales division of a company. And so I am, I don't know, maybe a bit fussier about analytical skill, and other people in my organization might not be. But, you know, I would embed your observation about working at a cat modeling group in just the way our society is changing generally and the economy is changing generally. I mean, analytics, data science, big data, using programming, machine learning, all that. There is a shift towards more analytically intensive roles in, I think, in every industry, every single one.
Completely.
And insurance is no different. Insurance is maybe even more intensely the case, but it's happening all over the place. Where the returns to technical education, STEM fields, you know, that term didn't exist 20 years ago. It's super important. I mean, that's something you need to be able to do in order to succeed, I think, certainly in more sophisticated industries like insurance, reinsurance.
Yeah. So here's an observation I have. You know, I've been in insurance for 20 plus years in one form or another, and my ability to produce value, I think, has exponentially grown, but that was due to all of the learning experiences I had in the shitty jobs.
Sure.
You know, so I had to go through the shitty jobs.
Yeah.
To
In the
then,
industry or generally, you mean?
I think generally. I
Sure.
think this is a general observation, but I'll keep it specific to insurance. You know, like I started selling auto and homeowners,
Yep.
and it wasn't for me. And so then I started selling, you know, small business, and that wasn't for me. And then I started selling large commercial, and that wasn't for me. Then I got into analytics, and that was for me. But here's the thing: I got into analytics, and I feel like I got pretty good at it. But I am today. My value is all the jobs that weren't for me.
Yeah.
Is the value, because what I do, I feel like the value that I bring is, for example, a place in Elliott City, Maryland, just had a massive flood a week or two ago. 1 in 1,000. I'm using my air quotes. 1 in 1,000 year flood, whatever that means, and they've had 2 of them in the past 3 years. So
Right.
I'm someone that writes flood business. What's that mean to me? Well, I go in and try to do analytics on it, and you would think we've come so far. We haven't come anywhere. And so what I'm doing is I'm putting my sales hat on and trying to figure out. I'm always thinking, what kind of product, what kind of advantage can I get? What are the other people doing that I'm competing against? You know, how are they thinking through this problem? And I feel like part of the advantage that I have is that I did the sales part. I hated it. It wasn't for me, but it provided incredible amounts of value because I know how to write a policy form. Why? Because I've read 1,000 of them. You know, so I know exactly like how they sort of flow. I may not get it right, and I'm probably going to have to hand it off to a lawyer, but it became incredibly valuable. And so for this is like not leading to a question. This is just kind of me just
Well, I can react because
Yeah.
I agree in a couple of different ways. Where one, I didn't like sales either. I can remember the first time that I was ever in a sales. You know, actually the first sales memory I had, which I haven't thought about in a little while, is selling fundraisers at school. You have to go and sell
Yes.
chocolate bars or whatever.
Oh
it is.
yes,
I
knocking on doors.
hated that. I hated that. I would never do it. I hated it. I was so uncomfortable going to people and asking them for stuff. And then the next experience I had was I have a bunch of those experiences where I hated doing that and did a terrible job at it. And then I took a bunch of really terrible summer jobs when I was in high school. None of them were selling, so it was like, farm work, greenhouses, construction, pretty. I mean, they were fine, right? But they were they were unskilled labor jobs in a small town in Ontario, right? And then I went to university and had my next kind of real big sales experience was working at the front desk of a hotel, which you don't think of too much as sales, but people come walking in and you take the phone calls. At that hotel was a small hotel, and so we didn't have a reservations group, and like the people at the desk was the one who sold you the room. And so you're negotiating on price with people and disappointing them. And
there's a customer service aspect to it that's sales-ish.
Yep. And I hated that. Absolutely hated it. And at the same time, I was lazy, and so I didn't take any technical subjects in university. And so wound up in a sales position at the company I work at now. And like you, I kind of migrated a little bit through the organization, then found the technical roles and realized this is what I want. Then we talked about this in our last interview, and then came back to the sales side. And now I understand. Now I feel like I have an advantage in the sales business, and I feel more confident and comfortable that I understand how and why people do what they do. And that's what the journey wound up where I started, just like you, and I'm really grateful for it, and I love it now. I think a certain I understand. I think how sales is glorious. It's a dirty job in some ways. It's like a social dirty job, right? Where you're kind of putting yourself on people and trying to force something out of them and take something from them is sort of the negative kind of interpretation of sales, which I don't agree with. I mean, I think the best kind of salespeople are those that help the client understand better what it is that they want to do, and that might not be a sale. So you can vary, and I've a lot of instances of this in my career where working with a client or a prospect, working through whether we can help them, and it becomes clear to me that I cannot help them, and then I leave because I'm out. I trust my own abilities, that I haven't left something on the table. I've explored all the avenues, and there's nothing's open to us, and so we part company.
Yeah. So, to me, I love that. I love that analogy, because to me, I'm always espousing planting seeds. It's planting a seed. Mm-hmm. You didn't make the sale then. You might make some future sale because you planted a seed, because you developed trust with them, that you didn't take their money or didn't try to take their money in a situation where you couldn't provide any value. So I love the way you describe sales. It's really help. It's I heard someone else saying it's helping customers buy. Customers don't always know what they want, and you help them sort that out. Buying is difficult.
Yep.
Even I get to I'd like to get your feedback on this, just in the insurance business in general, probably the retail side mostly. There's this feeling that consumers do 60% of their research before they even approach a company for a quote or whatever. So it's very easy for Google to come in and just kind of take that over. Your thoughts on that part of it? Because I don't agree. That last 40% is the heavy lifting.
I agree. So my view on Google is, I think that Google is in the insurance business, very much so. They're all over it. But they are not displaced in the insurance call it intellectual contribution. What they are doing is they are generating leads. So all they do is they take that 60% and they monetize that. And they do not sell insurance policies. But what they do is they actually, through the purchase of AdWords or whatever, you can use Google as a distribution outlet or as an opportunity to generate insurance leads, get them at that 60% and take them to the 100%. Where that's still, I agree with you that needs to happen. The consumer's not going to do that on their own, but Google has still found a way to monetize that 60%. And guess what? 60% is more than half.
Yeah.
And so actually, I think that there's the business, and this is not quite where you're going with that question, I think, but I think that there's going to be an adaptation to Google in certain lines of business. It's not just Google; it's Facebook and it's probably Twitter,
Amazon.
All these guys. They are in the software business. And software business has margins that are inconceivable to any other business, right?
Especially insurance. So I think people don't understand how poor the margins are in the retail insurance business.
Sure, and in anything other than software, because these are organizations that's 50% margins or more, and they're insane how much money they're making. And would they contaminate that phenomenal business by getting into bricks and mortar insurance sales, not even bricks and mortar, call center, whatever you want to call it, right? There's no way they're going to do that. They're going to hire all these people and train them and have quality control and, deal with all the humans, and it's like, forget it. We just do the software part and extract the value from that, because that's what I know how to do. And so actually, probably take up, squeeze the margins even more in the rest of the businesses, right? Because now that sales part, which is actually kind of the hardest part, can you get the initial lead and get the person's foot in the door? So I think that Google is they're not a they're a symbiote for us, right? So they are combining, they're part of the value chain. They're not displacing any part of it. They are simply becoming part of it. So that agent who's cold calling, who's trying to go out and get the business, that's the part that Google's doing for you now. And so now you're just going to be this insurance advisor type, which is quite a lot of what you're already doing. And maybe that's that's okay or not. I think that for a lot of lines of business is where the world's going.
Yeah. So that gets us to a conversation we were having before we hit record, which is the value of the broker is like the value of the consultant. It's beyond just you selling someone. There are a lot of other social dynamics around having someone else come in and help you make a decision. So my feelings are with insurance, like I think a good agent or broker is still going to be a good agent or broker, because they're going to bring a lot of value to the table, especially at a certain dollar amount. To me, like the magic number is like 1,000. Once the price gets above 1,000, you're not just going to go online and just hit buy to buy a piece of paper.
Sure, yeah.
You're probably going to want someone's opinion.
Yeah, it's time out. This is a lot of money. Let's think about it real hard.
But in like the stuff that you deal with, you're dealing with potentially millions of dollars. So besides just connecting your client with a market, there's all of this other value, including breaking deadlocks, being a non-biased third party. Could an insurance company, let me ask you this quick question. Could an insurance company buy all of their reinsurance all on their own without a broker?
They can, yes. Okay. It can be done.
Okay. So there's probably a lot of politics that go on in like a large company like AIG, where a reinsurance broker can come in and kind of settle some scores and be that non-biased person. What do you think of the non-sales part of it? Like you as a consultant coming in and basically being able to help the CEO get his message across. Like, we want to do this, and you come in and say, yeah, you should be doing that. It's settled. We're going to do that.
That's an interesting question. I think that it's something that definitely emerges after the fact. It's hard to pitch as an inroad, right? And saying, you need help with managing the politics of your organization. That's probably not going to get much traction, but once you're in an organization, you have an interesting cross-section of relationships with the organization. And I have seen it myself directly, where the organization values your perspective on its problems. And that, when I say organization there, not necessarily just CEO, but others. And so you can help the organization grow and achieve its objectives. In some ways, I was talking to somebody about this a little while ago, where the subject of the conversation was, as a broker, as a reinsurance broker, who is on whose interest am I working? On behalf of whose interest am I working? Is it the CEO? Is it the buyer? Is it the policyholder? Who is it? And the conclusion I came to is it's actually the organization itself, because the organization, as it embodies the brand and the continuation of its policyholder base and its strategy, which evolves, but it has capital holders too, but they can come and go. Everybody else can kind of come and go, but the reinsurance broker's relationship tends to be with the organization. Now, when you become part of when you work with an organization very closely for a long time, people do come and go, and you can keep those relationships, and so it can expand, right? But the priority is to renew the deal to that company. That's what my boss tells me to do, and that's what I tell my guys to do, is you need to keep the renewals. And that means the company. It's the CEO might go, and you still got to renew that deal, right? Yeah. And the investors might sell out, and the company might get sold. You still got to renew that deal. Yeah. And so there's something else. There's some other kind of embodiment of the organization's, I guess, person that the reinsurance broker serves, which is kind of bigger and yet at the same time smaller than everything else.
What kind of insights do you have in terms of the health of mid and small size insurance carriers. So everything from like, the Midwest mutuals that are pretty small, but also like a lot of the Florida startups that came in after 2004, 2005 with minimal capital. Is there a place? Is that market healthy? Do you see any changes coming on the horizon?
I see the startup rate pretty much at zero, right? So there aren't really a lot of new companies. I mean, there are new companies, of course, being started. I mean, you're a company that's new that's being started, but relative to other kind of, call it heavy birth periods in the past, it's pretty benign. And so most of the companies that exist are incumbents, and when you're in business and in life, you're either growing or shrinking. Basically, there's no standing still, and so you're either getting better or getting worse. And eventually, you'll have some attrition from the organizations that are getting worse. They're going to go away. They're going to get bought or whatever it is. If they're not being replaced by yet more smaller companies or enough to replace that attrition, then I think that the marketplace of smaller organizations is going to overall probably shrink. And I think that's the case. That's what's going on. In larger organizations, a soft market, like I mentioned earlier, which is a market that's contracting in terms of not in terms of the total volume of premium, but in terms of kind of head count and in terms of company count. I think that there's a lot of benefits to scale. And you know what? Actually, I would say that I believe that's the case. There are benefits to scale, but it's a little more ambiguous because there are definitely benefits to. There are all sorts of, call it biases, and there's an urge for companies to build empires, and so they'll buy, whether or not it's a good idea for their shareholders. They'll still do that, and so I think companies grow, and they grow to enormous size, and they're going to keep buying smaller companies, and that's going to carry on. Irrespective of whether they're adding value individually. So the reason to make that point is to say that it's not obvious to me what the right move is. Like, should there be a smaller or larger companies? I think that there's a place for all of them, but I think that unless there's some sort of disruption in the marketplace where you need people who have a different perspective and can start up a company to bring that perspective to the marketplace, it's going to be harder for smaller companies to, or at least we'll observe fewer smaller companies over time.
Okay. What about on the reinsurance side? So a lot of capital coming in from private equity, hedge funds, more of the investment side world, pension funds looking to take advantage of the non-correlation of insurance losses to stock, bonds, currencies, that type of thing. You think that seems like hasn't slowed down?
Yeah, I don't think it will. I mean, I think there's a fundamental business case there. It just makes sense.
Do you think there's a fundamental business case for some of the large, like European reinsurers, to change their business model a bit? Or are they kind of sheltered?
Harder to tell, because quite a lot of large European reinsurers, their base of business is European countries where it's a pretty cozy oligopoly. They're way more so than it is over here, and they go direct, and there's like 2 reinsurers or 3 or whatever it is you have to go to, and so it's a very different world over there. I don't know much about it, but I don't infer from what I see about these organizations that there's much pressure there to do anything other than continue the way they are. Over here, maybe it's a little bit different. The marketplace is a little bit more dynamic, that being in the United States, and so I think that there's there was a time a few years ago when I thought every reinsurer was going to have 2 sidecars. Sidecar being, call it this spin-up organization that's just a capital vehicle for them, and one would be for the pension funds who write all the catastrophe risk that they're going to have because they can diversify the Florida peak peril against stocks and bonds, as you said. It's uncorrelated and they can do it cheaper. And then the other sidecar would be an investment vehicle that they could put into some kind of fancy hedge fund who's going to go long short equity or whatever it is, and they're going to generate 15% returns on their portfolio, and that will allow them to write cheaper low volatility reinsurance. Now, I think it's not clear to me that either of those things have come to pass for some reason. I think that the pension funds have continued to invest or allocate capital to the reinsurance business. I think there is much more of it seems to me that there's much more of a few big companies that have made out big in that, and there's some others that just haven't really played. And then on the kind of hedge fund reinsurance side, the equities investment side, they just haven't had the returns that have sustained the business models. And so those guys are adapting away, I think, or probably will be adapting away from that and looking more like normal reinsurers.
Yep.
So I think the business changed probably a little bit less than I thought it would have 5 or 6 years ago. And so I'm not really sure I believe in anything I say now.
Yeah.
That stuff.
Want to play a wordplay game?
Yeah, sure.
Okay. So it doesn't have to be a single word, but
Okay.
first sentence or two that comes to your mind. Warren Buffett.
The first word that came to my mind was old. And I think the success of that organization is remarkable in the long time that he's been in business, and it's amazing to me that he's been able to keep up the energy that he has. So it is him a disservice to have that be the word, but that was the word.
Yeah, okay. Catastrophe models.
Complex. Those are models that frustrate me. I mean, they're remarkable feats of engineering. They really are. They feel to me like they are over-engineered.
Yeah.
I think that they try and do too much
Yep.
with too little. But they're locked in.
Yep.
And so I don't know if we're going to be able to do anything about that soon.
Climate models.
I don't know enough about it. I think that I did an interview on my podcast with a guy named Judah Cohen, so there's no word here. Sorry. But the idea that weather models generally aren't really informed by theory. They have very, very basic physics equations that they're solving at scale. And so they're incredibly simple, actually. And then the improvement in their accuracy or the improvement in them generally is down to just having more compute power and just throwing more CPUs at it.
Yeah.
So there's no advance in what I think of as the understanding of how the climate works. It's not even statistics. It's engineering, and there's a data analysis, and then there's politics. A ton of politics.
Probably more so. Final one. Insurance nerds.
I love the name. I love the name, and I love you guys. I think that
Not everyone loves the name.
Oh,
so,
really?
Yeah.
I think the name's fantastic. I wish I'd come up with it. It's a great name. So I guess that's the reaction. I think that
That's
you guys.
fine, as long as people know who it is.
Yeah,
as long as you spell it right.
Yeah, I think you guys are doing is great. I think that there's something in the marketplace for it, and I'm very happy to help.
What are you reading right now?
There's one book in my queue, and I can't remember the name of it because it's for a podcast. So typically my reading is guided by what I'm going to be interviewing somebody about. There's a line of I think it's economic analysis, which I think is underappreciated, which is looking at how the economy is changing due to, well, the observation that a lot of people make is that the company's getting bigger, and so fixed costs as a proportion, variable costs are going down, and so you can invest and you can have a platform called a software platform that's like Google, right? So it supplies a lot of product, very cheap marginal prices, and how does that impact a lot of other parts of the economy? And there's a few books on that, and I did a podcast with a guy named Arnold Kling on this, and there's another one that's coming up, and I just forgotten the name of the book that I've gotten, and I'm going to start reading about that, and I'm going to be doing that, recording the interview later this summer. And so that's going to be the next thing that I read, although I'm not reading it yet. So right now I'm in between works.
You send me the name of the book so we can put it on the show notes.
Yeah, sure, I will.
Okay.
Yeah, definitely.
Okay, well, I'll respect your time. You have a business meeting to go to. We didn't even mention your podcast. So David Wright is most of the listeners will probably know because I push your podcast on my social media, but the Not Unreasonable.
That's me, yeah.
Podcast. Where'd that name come from?
It's kind of an actuarial joke where the standard of evidence for whether something is true or is not that's reasonable or that's correct or that's true. It's not unreasonable. And so it's sort of this self-deprecating kind of idea that we don't really know much about what the way things are.
Yeah, well, that's true. So for anyone that's listening, I will put a link to David's podcast. It's a must listen. David's a natural. and I knew you would be. You just sort of picked it up and went with it, and right from the start you were hitting like doubles off the wall, and then you were blasting them out of the park. So you're the Aaron Judge of podcasts. So this was good. This was interesting. Logan Airport, we're looking at Japan Airlines plane, and
Yeah, we're in the cell phone lot
in the cell phone lot, and
of Logan Airport in Nick's car.
people around us are probably like, what the hell's going on?
Why are these microphones everywhere?
It was a pleasure running into you again.
Yeah, thanks a lot, Nick. Appreciate it.